Welcome back to Golden Rule Radio, your weekly recap of the precious metals markets, the news that moves those markets. And while we are going to cover the precious metals this week, we do have a fair bit of news to get into here later in the show. So let's dive right in. Gold coming all the way up into the 1530s, and we're actually pushing against the what was the floor during the 2011, 12, 13 end of the last major run up. So, I had that 1285 number that we blew right past. So I'd argue that becomes our next real floor here. But my question, of course, is where's our top? Where's our top on our move, guys?
That's tough to tell. I haven't seen stability in the price like this, honestly, since 2009 and 10, and a little bit into 2011, where you kept thinking, yeah, there's going to be a significant pullback, and it's not happening. It's coinciding with a lot of volatility, though. I mean, yesterday, Eric and I are sitting there doing peak to trough numbers, and on the China tariff delay news, we saw gold fluctuate 5%.
Within a matter of, a half an hour, maybe 45 minutes? When I woke up yesterday at 6 o'clock Mountain Time, gold was around 1530. Got into the office about 7, and it was still in the high 1500s. Went to get a cup of coffee, and when I came back, Tori actually grabbed me and said, "Did you see gold?" And we were in the 1480s.
Yeah, all of a sudden it was free fall central. So, but we're right back up to around 1520 today with, again, continued volatility as low as, the low 1500s up to 1527. So that volatility stays, although, Miles, as you pointed out, we're in this new trading channel. What do you see technically, honestly, as the next ceiling?
Well, the next reasonable ceiling would have been that 1532 hit, which was the floor from the top end of the last major cycle that we talked about following the stock market crash. The next bump up would be somewhere in the mid 1600s. Then there's really nothing till about 1800. So we've got a couple pretty big levels here, but these levels are starting to spread out. If you look at the velocity at which gold rose during that time period, that manic phase of the last bull market, when you have that much movement in such a short period of time, then it really stretches out the rungs on the ladder, and you don't really know where the bears are going to defend. Now, I brought this up last week. I don't think the bears are defending anymore. Any move down in price is not a bearish defense. Going forward, it's going to be short-term profit taking and looking to re-enter. So I think this is where the market gets extremely technical for the next couple months until the average buyer mania sets in and we get into that manic period where you can just throw technicals out the window and just hold on to your seat.
Yeah, this is eerily similar to 2008 and 9 when the equities markets were turning down and the dollar and the precious metals were rallying at the same time.
Right.
So we'll see, when you said that we were going to go through 1385 and then there was really nothing until about 1450 or even 1500, that we knew was going to be the case. What I'm surprised about is that we haven't taken a breather. And I'm going to be honest, I've been wrong on that. I've even told some clients, hold your horses here a little bit. Let's wait for that pullback. And I've got to lean towards the fact that we still have to see it. I just don't know off of what number. Is it off of 1650 or is it off of here 1532?
Sure. And at this point, it just becomes where do we turn around? And then when we do, how deep is the correction? So, and I did the exact same thing. I had some clients who were looking at taking IRA distributions and other things this year to take some smaller liquidations. And we were holding off for about 1485, and now we're in the 1500s and maybe still holding off. So when I say things start getting technical here, watch your fibs, watch your Elliott wave theory. We're possibly 2 of 3 drives up right now, starting our 3rd drive, so we could see another bit of a push up. Start paying attention to divergence, start paying attention to some of the indicators that you would if you were trading other markets, because there's no fight on the other side at this point. It's all what do the bulls want to do? The bulls are in charge. The bulls are controlling both sides of the markets. What do the bulls want to do? Where do they want to see their profits?
Eric, what do you see going on silver-wise?
Silver responded pretty much the same way as gold yesterday. I think yesterday morning we had about a 3% swing in the price of silver. Bounced back today up about 1.5%. We're currently sitting at about 17.25, which, as we mentioned last week, was silver's first real test. So we're sitting there now,
just like we were this time last week, sitting in the exact same spot despite all the volatility.
It does, though, seem that silver's trying to outpace gold a little bit here and close that ratio gap. Hasn't moved much now, but we did go from, as we mentioned a few times, hit the high of 92.4 on the gold silver ratio. Right now we're in the 87. So on these up days, silver is outpacing gold. Platinum, not so much the same. Miles, what do you got going with platinum?
Yeah, platinum, take the silver story and just add a couple percent to it. I mean, we looked at some of the percentages silver needs to go. Interesting point. You overlay the silver and the gold chart right now. Silver now has to get up to almost $30 to match what gold has also done. So keep pushing silver and platinum, 35 or so percent to go to get to the same spot. So silver and platinum are definitely due a little rubber band snapback to catch up with where gold's been pushing. But platinum lagging a little bit behind over the last week, or at least trading up, but mostly sideways. Palladium definitely, to me, looks like it's trying to find its top. A lot of volatility in a short period of time, big percentage moves up and down. It is down off that high, and it actually looks more like the Dow chart than it does the other metals.
Yeah, if you're sitting in a 100% gold bullion position, you've really got to take advantage of this opportunity to move some of that into silver and into platinum.
I do think it's worth bringing up the Dow, moving over from palladium. The Dow now down about 7% from the last high, but like I like to do from time to time, I was bust out the old Dow theory, Robert Rea concept. The transports are down 9.5% from their recent high. But here's where the big difference is. The transports never put a new high in. The high they put in back in the middle of 2018 was the highest they ever got. The Dow was able to rebound after the December drop. That almost 20%, they say 20% drop signals a bear market. So we got to 19.5 before the floodgate of free money opened, pushed it back up. The industrials did push back up to a new high. The transports did not. So arguably, while the Dow is down 7% from its most recent high, the transports are down 15.
See, and that's what everybody needs to keep in mind with this, is this isn't just U.S. transport indexed either,
No.
right? This is a global slowdown. You've got UK expectations at the lowest that they've been in years. You've got the China tensions, right? A lot of what they're doing is out of desperation, and they know that they're limited in any sort of leverage with Trump. But what we're seeing in Argentina, Eric, speak to the Argentinian event.
Yeah, we just saw, was it yesterday or the day before, Argentina had a 48% drop, one-day drop in their markets, which is the largest single-day negative move that we've had since 1950.
In the world.
In the world, yeah. And the Dow just today alone dropped 800 points, about 3%, and that pushed it below its 200-day moving average. The S&P was also down 3%. 499 out of the 500 companies on the S&P were down today. The other thing I'd like to point out too is that cryptos are selling off with equities right now. We've been kind of waiting to see how they'd respond to a true bear market in the equities. I've had multiple conversations with friends of mine who are in the crypto world. They work for some companies, and I mentioned that to them in the comparison versus gold. We'll see how it does in a bear market. And their response was, well, we had a bear market in cryptos. And I understand that. You did see a bear market in cryptos from last January to about middle of this year, June. Saying that, I know Bitcoin's down about 14% this week. By the time the show comes out, it could be up 30% or down 40%. But it's just interesting to see how it's reacting to this sell-off.
Well, and on the flip side of that, the dollar continues to climb despite the interest rates going down. So my argument here is this is a period of circling wagons. Any type of smart money is bringing that money home and possibly looking towards other opportunities. So I don't know if I've quite given up on the crypto side. I certainly haven't given up on the precious metals because gold has been pretty clear the direction it's now starting to trend.
Yeah, I don't think that's what Eric's saying. I think Eric's saying, look, if you're treating it like gold, it's not acting like
Right.
gold in this type of a downturn market. From a hedge standpoint, it may still be an important piece to your portfolio, the crypto world, but what he's, right, Eric?
Right. I'm not trying to say anything even negative about crypto. I know a lot of you have made a lot of money in that. I'm just trying to show, and maybe we're seeing the difference between, gold as the safe haven that it's been forever, and just trying to get to see what cryptos are going to do when we have a real downturn in the markets.
Sure, but getting liquid, when markets as a whole start getting liquid, we're in a market phase where obviously the Dow is still 26,000, 27. We're clearly still in the early phases, and I wouldn't call this panic selling by any means, but the motivation's still the same. The only difference is that, smart investors that are getting out of the markets at these prices because they see the writing on the wall, what they're doing is they're getting liquid for the sake of possible opportunity. The real issue comes is when the panic does set in, when the Dow's at 22 or 20 or 18, and the average person is just getting out and not saying, okay, what should I look towards next? But they're saying, what do I possibly have left? And it's the have left market that causes that manic phase. That causes gold to go to 3,200 on this move. That causes Bitcoin maybe to turn around and push up as people are looking for alternative investments, and causes the Dow to come back to the previous high around 14,000, 15,000 on a pretty massive correction at that point.
Yeah, Miles, I love the circling your wagons sort of analogy, because that's what we talked about last week, is they know that something's going on, and they meaning obviously the governments of the world, the central banks of the world, the monetary policy makers of the world. They know that something's going on, and you see these indications of a global slowdown. Even oil, we haven't talked about that, but that's off sharply again, another 3% today. And that Argentinian drop, the expectation now is for default. Okay, so they have to react. They have to, and if you look closely at the words that they're choosing to say, Eric, you follow central banks, what are they saying? What's going on?
Well, we've mentioned, over the last few weeks, both on this show and the commentary, about the IMF report that came out, kind of welcoming zero or even negative interest rates. And I came across an article actually earlier today from Alan Greenspan, a quote from him that says, "There's an international arbitrage going on in the bond market that is helping drive long-term treasury yields lower. There is no barrier for U.S. treasury yields going below zero. Zero has no meaning besides just being a certain level."
Well, maybe no meaning on the global banking scale, but it certainly has meaning on the value of my bank account.
That's right. And I'd argue the value of gold as well would argue at that point.
Yeah, or the fees you're going to be paying.
Right. Yeah.
Well, what happens when there's uncertainty? What happens when there's even the semblance of initial stages of fear? And that's that people get a little bit desperate. Not only do they get desperate, they start to try to control situations, try to control outcomes. And that's what the figuring is that's going on behind closed doors, but it's also going on in open waters. You're seeing Iran refusing to succumb to these international pressures with reaching a new nuclear agreement and trying to get them to come into line. They're still causing trouble in the Gulf. They're disguising their ships. They're scrambling radars. They're causing British ships to even wander into their waters. And, that's stuff that's, you're poking the bear a little bit, but the poking the dragon, we'll see how that plays out. That's what Trump's been doing with China, and Hong Kong has been poking the dragon. And there, to me, lies sort of the hotbed right now from a geopolitical standpoint, is China's now saying, hey, U.S., stay out of the situation in Hong Kong, don't meddle. Meanwhile, the Hong Kong citizens that are protesting and causing so much turmoil are marching with U.S. flags, pro-U.S. sentiment. And, of course that's going to upset Shanghai.
Well, Tori, moving outside of Hong Kong, we got some news from Russia this weekend that looks like a little baby Chernobyl incident kicking up. What did you find out about that?
Well, they're trying to fuel a rocket with a little nuclear reactor, and the thing blew up and killed 5 of their key scientists. And that's something that we hope is not a semblance of things to come, because that's just really uncharted territory, obviously, in very dangerous waters.
Well, and this comes amid, talks between the U.S. and Russia about our nuclear programs. And Russia flat out said a few weeks ago, we'll make that race. We'll make this happen. We'll beat you to it. And here we go. A week later, they have an explosion of one. And I saw somewhere that the radiation level was 16 times what it should be in that area.
Yeah, if you can't beat the U.S. in terms of geography, if you can't gain an advantage or a strategic play by getting to a close locale, they can't even get Venezuela presence, because the U.S. is too resistant. And yet we can have a strong play with them in Ukraine and throughout Europe. Of course, they're going to develop some long-range missile. It only makes sense. Launch something from there, and it can circle the Earth as many times as it needs to, in order to strike whatever target they want. But, Yeah, it's scary stuff.
Well, it's like a new arms race. I mean, is this the new Star Wars program where instead of having all these satellites up in the sky, we're just going to have thousands of missiles that are just constantly circling the globe?
So before we wrap up the show, I want to circle back around to something here real fast, because two of the things that drive the metals prices are inflation and debt, right? Well, right now we just hit a 6-month high in the U.S. core inflation rate. So the Federal Reserve is saying, well, inflation's not an ongoing concern right now, so we're going to take this opportunity to reduce the Fed lending rate. Okay, well, you're now starting to see this core inflation start to accelerate. And this to me is an indicator. I'm telling you guys, the scales have tipped. We're right back where we were in 2006 and 2007. One, they know it's coming. Two, we're seeing the numbers rolling in that's telling us that it's coming. You got 15.5% inflation in healthcare year over year. Okay, that's an ongoing trend. You've got $1 trillion in U.S. credit card debt right now. $1 trillion. Okay. I mean, Eric, you're pointing out something to me the other day too, just on the mortgages.
Yeah, I just saw an article yesterday that the U.S. has now eclipsed its all-time record of mortgage debt. I believe it was 2007 or 2008, but we just this quarter have surpassed that number. So we have now got more mortgage debt than we did before the Great Recession, if you will. And as you mentioned, Tori, what do we have left in our arsenal?
Well, nothing. And that, I think that we're learning that from Europe. Here's the Federal Reserve lowering the interest rate, the Fed lending rate, and it is not stimulating mortgage borrowing. It is not stimulating the housing market. So what are they going to do? Lower it further to try to stimulate? Listen, here's the statement of the day. Consumers in the United States are more in debt than ever before. Bankruptcies are surging. Okay? This is a repeat of what slowed the credit markets down before, and it's on a global scale this time.
Well, that certainly ends the show on a cheery note, so we appreciate that, Dory. And not surprising, the stock market looks like 2006, 2007, and the gold price looks like 2006, 2007, because in 2006, 2007, we were on the way to watch that inflation debacle play out. Lo and behold, leading into an election year. Let's not forget that. That's
and
following
the run-up
up next year.
It started 4 years earlier.
Exactly.
Good point.
So let's not forget that too. And at that point, gold was set to make about a 200% rise from the 600-700 range up to almost 2,000. Silver went from $7 to $50. There are ways to protect yourself during these macro cycles, and that's why we do shows like this. So we encourage all of our clients, all of our listeners and readers and everything that we're putting out, give us a call. Let us sit down, help you look through your portfolio, add precious metals to your positions to offset some of the potential losses in other assets and provide the safe haven that you need in these type of market cycles.
Well, that's going to do it this week. Thanks for joining us. If you like what you heard, go ahead and subscribe, ring the bell. You can find us on Twitter at ICA Gold, Facebook, McIlvaney Financial. Head on over to our website at mcilvaney.com. And like Miles said, give us a call, 800-525-9556.
Thank you for listening. Have a great week.